I want to talk to you about the costs associated with your workers' compensation program that you probably don't know about. See, everybody focuses on their premium, and in Florida, that's easy to do because we all know that the state sets our rates. We all know that if we go to 10 different insurance companies, or even if you go to 10 different agents that go to 10 different insurance companies, the rates are going to be the same because the state of Florida tells us what we have to charge per $100 of payroll by class code. It's legislated. But what agents don't talk about typically is your experience modification factor and how that can be affected by the way claims are handled. Now, we have talked about the experience mod in plenty of other videos and blog posts, but there's a bigger underlying factor to your overall total cost of risk and workers' compensation premiums than what you realize. See, what people don't talk about, what agents don't talk about, is the indirect costs associated with a workers' compensation claim. The reason why is they really probably don't understand them. In fact, there have been many times that I have talked with business owners and decision makers where they don't realize how much money is leaking from their financial statements due to indirect costs as well. The Bureau of Labor Statistics says that the indirect costs of any workers' compensation claim across general industry ranges from 2 to 20 times the direct cost of a claim. Now, I realize that you probably don't believe this. In fact, many times when I talk with prospects, they don't believe it either. But I need you to understand that these are proven statistics, and whether you want to believe it or not, it's happening in your organization right now. Let's say, for example, that you had $100,000 worth of workers' compensation claims last year. Yes, you might have had an impact on your mod going forward, and you may pay some more premium, but what you don't realize is using the Bureau of Labor Statistics numbers, at a bare minimum, you spent an additional $200,000 from your company's financial statements in indirect costs. And the argument becomes, there's no way that I've spent that much money in indirect costs. And I need you to understand that it's an invalid argument. See, it's very difficult for me to accept that a company could have an experience mod of 1.4, which by all accounts is an F or even an F- on the grading scale. But for some reason, they've been able to become best in class at soft cost containment. See, the best in class companies, the ones with full-time risk managers and risk management staffs, are the companies that are getting 2 times. If your mod's high and you don't have a sophisticated risk management department or benchmarks or processes and procedures, guess what? You're probably paying more. So as you think through this, you have to ask yourself, what are the things that contribute to the indirect costs that David's talking about today? Well, we could be talking about the cost to rehire, replace, and retrain. You have to spend money to do that if you have an injured worker that's out. You could have the cost of lost productivity. If you bring the new people in, it takes them a while to get to the same level as the person who has gotten injured. You could have overtime charges because you didn't go out and rehire and retrain, but you used your existing help to work more hours. You could have loss of productivity or production rather if you're a manufacturing concern. God forbid a team member loses a limb in a piece of automated equipment and you have to shut that workstation down for several hours at a bare minimum, maybe even 24 or 48 hours. What happens if you have a deductible and that injury caused that piece of equipment to get broken? Where does that money come from? What about loss of market share? What if you're a manufacturer who has just-in-time production and you have an injury on the line somewhere and a piece of equipment is rendered useless for a period of time that removes your ability to be able to get your product produced and out to your ultimate retail channel on time? What happens when you lose that shelf space? Yeah, you're going to lose money from losing it now, but how do you predict how much that costs going into the future? If your shelf space gets reduced because your retail channel no longer can trust that you're going to be able to get things to them in a reasonable amount of time. See, we can go into all kinds of things like contingent business income and everything else. That's not what we're talking about today. What I want you to see and what I want you to understand and what I want you to get from this is take your workers' compensation loss runs and then look at every claim that you had over the course of the last year, add them up, and then multiply that by 2. See, I know that the average person watching this video is not a best-in-class operator with indirect costs, so I can win the argument of 2 every time. You're probably paying more than 2 times, but just use 2 to give yourself an idea of how much it's costing you. When you do that, please do me a favor. Take the time to pick up the phone and give me a shout. I'm not a high-pressure salesperson, but I am very good at educating my clients and prospects on total cost of risk, and I make sure that they understand just how much these things are affecting their bottom line. So if you'd like for us to come in and do a complimentary experience modification audit for you, we're willing to do that, and part of that discussion is talking about the indirect costs associated with the claims that you have in your organization.